So you've passed your prop firm challenge, you've gone through the challenge phases, and now you've got your first payout. Or maybe you're a few payouts down the line and you were looking to know basically what to do with the money you make from your prop firm funded accounts. And I've had many payouts over the past few years. So I'm going to give you an idea of what I would personally do if I was in your position getting a payout now in 2025, and what you should do plan wise to plan for future payouts and hopefully optimize what you actually do with those financially for the future. So we're going to start with one that you've probably expected when you've clicked on this video, but we're going to get it out of the way early. And if you didn't expect it, this is to buy more prop firm challenges. Many people fail when they're trading because they try and keep one funded account and basically make a living from that one funded account. The reason why this is bad is that you then have a 10% drawdown and that is it. The best way to actually do this is to have multiple 100k accounts with that 10% drawdown, but don't trade them all at the same time. The reason behind this is if you trade all 5 at the same time, you only have a 10% drawdown. You're obviously trading 500k then, but still the drawdown is a percentage of 10%. Whereas if you trade all of those separately, so you could have, let's say 5 days in a week, and you trade one on each day, or if you win a trade, you then move on to the next one, or if you lose a trade, you move on to the next one, depending on how you want to set it up. But then you have 50% drawdown. So let's say you're down 20% profit-wise when you're trading. So on a personal account, you'd be down 20%. You can still get payouts, which is the beauty of prop firm trading. You can lose money percentage-wise, and you can still get payouts profit-wise. So by investing in more challenges, but from your profits, it means that they are totally risk-free because it's money that you would not have before taking the prop firm challenge in the first place. And once you've got a payout, as you guys know, you get your refund from the first challenge anyway. So you're basically taking more challenges risk-free to free up your drawdown in the future, which in my opinion is probably the best way to actually do it, so that when you are trading 6 months later, you will thank yourself for actually giving yourself the opportunity to have 50% drawdown rather than 10% drawdown. And if you actually follow that, you can scale quickly, the payouts will be bigger, you get more frequent payouts because it's not like there's one payout per month and you're having to wait the whole month for it. No, you have 4 or 5 different accounts trading. If you want to be smart about it, you can actually diversify with different prop firm companies. So let's say you can go for FTMO, you can go through any others that are available, and not just go all with one, because if you know all your eggs in one basket is never really a good idea, especially how volatile this prop firm space and industry actually is at the moment. It's better to basically spread it as wide as possible, but with reputable firms, not random ones that have just set up last week. Probably best to stay away from those until they have built their reputation a little bit further. Next, we're going to talk about reinvesting into yourself. So you as a trader can always get better. So this could be something very simple. It could be a journaling tool. It could be a risk management tool. It could literally be a backtesting software like FX Replay. There are links in the description to all the softwares and apps that I use. If you want to check them out and know what I use to trade, then it is obviously down there. I just use journaling software and a backtesting software. It's kind of all you really need, because you can look at previous data and get your results. Then you can journal your live trading results and get the data from that too. And then you can compare them. Very good thing to do is comparing your data, past and present. So then you can hopefully have a good idea of what's going to happen in the future. Whereas if you don't pay for those things, you're going to have to do it all manually on Excel spreadsheets or Google Sheets or Notion and try and make it all yourself, which can be quite time consuming. You have to do all the formulas yourself. You basically have to start from scratch. Whereas if you're using a pre-built platform, it does make it 10 times easier. And you will find things in a journaling software that you would not have noticed otherwise. It might even be days of the week. It might be certain entry times. It might be after 5 hours, trades lose. These are simple things that you can actually look at that you might not notice if you're just journaling a few lines in Excel spreadsheet. Whereas on a journaling software, it will tell you these things. And you can obviously input multiple strategies and get data for all of those, or even combine them and get data for all of them combined, trading together. That's the same example. If you have your 5 funded accounts, you can link them and have them as a combined to see how you're doing overall, but also have them individually to see how you're doing on each account, so you can compare them like that as well, which is definitely something that I would consider doing if I was in that situation. Other ways to invest in yourself could be by purchasing a mentorship. I truly believe that no matter how long you've been trading, no matter how good you are as a trader, you can always improve, and there's always people that you can learn from. So whether you want to purchase my mentorship and join the, I think, 700 or 800 traders that have learned from me, they've had hundreds of thousands of dollars in payouts. So if you do want to join that group of people and get access to me, check out in the description. But if you see someone doing well and you think you can learn from them and you want to invest a few £100s to learn, then it could be worth it. Make sure they know what they're talking about. Make sure they aren't just trying to sell you something when they clearly have no clue about trading, because I know a lot of people get scammed by those exact situations. So definitely be wary before you do spend your hard-earned money. But I do feel like you can learn a lot of things very quickly from a course because it's all condensed in one place. You don't have to go searching risk management over here, backtesting over here. Nope, if everything's in one place, it makes it 10 times easier. Another way to invest in yourself is to spend money learning how to code or paying someone to code your strategy for you. The reason I say this is because manual trading is very, very dependent on the trader. So you watching this video could have the exact strategy I trade on a spreadsheet or on a Word document in front of you, and we will have different results, most likely. Even if it is completely mechanical, we are most likely to have different results. And this is obviously down to the trader. So if you have that strategy coded, so you press start and it takes the trades for you, no matter the trader, as long as you're on the same platform, as long as you're same pair, same time frame, same strategy, same lines of code, it's going to perform the same. There could be slight differences with delays or different Wi-Fi speeds and brokers. This is obviously going to happen. But there's no reliability issues from the trading side of it, from the trader. The only issues you'll have is obviously it doesn't know what you haven't told it. So if you're trying to code a strategy, I've obviously coded one of my strategies and it is very, very successful from previous data, which I will be implementing live soon, which I might document on the channel. But a news event, if you haven't programmed that to not trade NFP, and NFP comes up and there's a valid setup, it will take that trade. So you need to be very, very careful that you've thought of absolutely everything before taking it live, which is why paying someone that's experienced in that field to actually do so could be very, very beneficial. And let's say you code a strategy for London session and you manually trade New York. It means that in London session, you're making money. Then you wake up, New York session, boom, trading, making money too. So basically, the only way in trading to make money in your sleep. Literally, you can make money in your sleep if you have a successful algorithm, which is very, very difficult to actually build. But once you get to that stage, it can be very, very profitable, especially if you do utilize it on prop firms and it can abide by their set rules. Now we're going to delve into investments outside of trading. And if you're in the UK, you get an ISA allowance of £20,000 per year. I think in America, they have a 401k. I'm not too familiar with American finance systems, but any profits you make are tax-free. So any profits I make from my index fund investments are tax-free, which is great because you can invest and not pay 20%, 30% on any profits you're making. So I would always put every single month or every single week money into index funds that track the US stock market usually, because historically it's never going to lose money and it never has lost money. I think it averages, I could be wrong, but 7, 8 or 9% per year, around that sort of range. And if you're making that per year just on the side with money that if you set up a direct debit, it's just coming out of your bank every single month or every single week investing. And then you look in 10 years time and you're like, whoa, that money that I didn't realize was coming out of my account has now made me millions. And that is the scenario that you want to be in. Leave money aside that you're not actively trading, you're not seeing every single day, money that's just on the side in another account that's just growing slowly. It's going to be very, very beneficial in the future. Another good thing about this is having passive investments is that it kind of gives you that peace of mind that you don't have to make every single piece of money in your life from your trading account. If you have other investments, whether it be crypto, index funds, property, stocks, you could go into private equity, you could start becoming an angel investor if you have enough money. You can do all of these different things. And it stops you relying on just making money from trading. It could also be spending money on buying a camera, lighting, a microphone to start a YouTube channel. Money can do wonderful things for you if you put it to work. Whereas if it's just sat in your bank account, it's not really going to do anything for you. It's just going to be losing money from inflation, which you don't really want. And I would say to you, allow yourself to spend some money. Whether this is 5%, 10%, could be 20% of the money you actually earn, because I was definitely guilty of this. I would make tons of money, I would have massive payouts, and I wouldn't pay myself. I wouldn't enjoy the money. And then when I realized that, why would I make this money if I'm never going to spend it? I then started enjoying myself a little bit more. But you need to be careful, because there is a fine line between enjoying yourself and becoming complacent. If you become complacent, it means all the hard work and momentum that has been growing in your trading career will go to zero, and you will have to start from scratch. So make sure you don't become complacent and that you stay focused, but give yourself time to relax, whether this be on weekends or after a losing streak or after a winning streak even, because sometimes after a winning streak, that can be more dangerous for you than coming off a losing streak, as you guys are probably aware from your own trading experiences, especially after experiencing beginner luck, which is quite prevalent in a lot of traders' careers nowadays, especially was in mine back in the day. Early 2020, it was absolutely brutal. It's probably the easiest way to actually say it. But allow yourself time to relax and basically build yourself up ready to trade again. But don't take too long off, because you kind of be out of tune with the markets and you never want that. So if you had a prop firm payout tomorrow, leave in the comments what you would do with that money. And if you did enjoy this video, be sure to like. I'll catch you guys in the next one.